Well, don't look now, folks, but the Atlanta Fed says that the current quarter, the one we're in right now, the gross domestic product is 4.8%. A week ago, it was 4%. So with 1 month to go, this could be the biggest quarter of economic growth this nation has seen in years. I think it's going to happen, but what does it mean for the market? I mean, we've had an amazing earnings season. We've had strong guidance, incredible manufacturing data, and yet the major indices spinning their wheels. They're locked in a trading range. Let's ask David Nelson. He's back with us along with Melissa Armo, stock swoosh. Melissa, you've been warning about this on your appearances here, saying, hey, you know what? Contain your excitement because this market just hasn't been able to break out. And is that a yellow flag for you? Is that some sort of negative sign that it hasn't?
It's a red flag because, again, not that we're not strong. I think we hold the uptrend, but we could be lower and dip down before we get over that area. You said a good word, breakout. That's what I want to see. And I will tell you this right now. After today's rally, after today's positive reports, what we must do 100% next week, we have to do it. We are too close not to do it now. If we don't gap up Monday morning and run up and run like crazy, then I don't see how we do it this summer.
I think she's got a great point, David. I mean, I love the resolve and how we climb off the canvas, but we need to break out at some point, or you probably will see the market give up.
And I think that's because we have this myopic focus on the big cap indexes at this point. But beneath the surface, there's a lot of action going on. And to her point, she's right. You know, we don't seem to have the memory from day to day, or we just forget everything that happened today, and then there'll be some kind of crisis.
Right,
on
so Monday morning, forget the jobs report, forget the consumer confidence numbers, forget the Fed beige book.
We could wake up Monday morning and Europe could announce something because the next election in Europe is likely to be a referendum on the euro, and then we'll panic over that.
But how long can we have this dual sort of existence where fundamentals exist with wild speculations and anxiety, real world things being mitigated by things that may or may not happen?
I think to your point, because everybody looks for price momentum to break out, but underneath the surface, you're seeing fundamental momentum. And estimate revisions are very, very powerful force, very, very strong. And in the end, we'll come back to those stocks. So I'm seeing real breakouts in materials and other industries that people forget and focus on.
I like what you're saying, though, because I've had a couple of good weeks. Some of my stock things have done extraordinarily well, and I've been focused on momentum with big tech names. Breakouts like Electronic Arts broke out up $5 today. These new highs make new highs, make new highs. And then I like the consumer. Lululemon was up big. I wasn't in it. Wish I was. It was on my list of breakouts 2 weeks ago. These are trends where people are making big-time money, but it's in a handful of stocks.
They are, but here's the thing. Tech is leading the way once again today. Amazon made new highs. Netflix made new highs. Facebook and Apple were close to the highs. But I'm telling you, it's not 2016. It's not 2017. Those stocks lifted, and then everything went with them. It's 2018.
Melissa,
the banks are lagging.
Consumer discretionary and other industries are right there with them.
I know, but I'm telling you, you're not going to have a market with new highs without the banks. It's not going to happen.
Without the banks?
Without the banks. Goldman is down.
What's wrong?
JP Morgan is down. We're not near the highs.
Strong today. Pretty extraordinary.
They're nowhere near the highs. They look like this. Here's the high. Here's where it traded today.
Do you think I don't know that we need the banks. We did well last year without the banks.
Banks don't have to be the leading sector, but they certainly have to do well. You can't have a bull market without technology and financials.
All right, so let's talk about now what are the catalysts, because now we've gone through the most important data point of any month, the jobs report. And it feels like every time that happens, we go back into a lull and we wait for the next jobs report.
We'll start focusing on earnings, at some point in the next month. We'll start looking. We'll see what analysts are starting to say. We'll be looking at the estimate revisions. So every data point is important, but this was the big one.
I kind of find I find that sometimes these major bottoms and sometimes these breakouts can be very stealthy and not have a real catalyst per se. And I'm kind of looking at that. For me, the Dow getting above 25,000, I think, is a huge buy signal. Is that where's your buy signal?
I want to see the 26,000 number, but either way, we get up over 25,000, then we may get right up to 26,000. I want to see a huge,
well, it's pretty easy to become
through.
bullish when everything is at a new high. When you break out to 26,000, I think people need to take their focus off the big index. Start looking at individual names.
And we should point out the Russell 2000 has been a monster, right? I mean, that's a great.
And the Nasdaq had a good day too. The Nasdaq
great proxy
up
for the
today,
U.S. economy. All right, thank you both very much.